Hey guys, good afternoon. It's Angelo Christian. Thank you so much for watching our podcast, Real Estate Insider. It's where America goes for funding, guys. For the last 20 years, we've been educating people all over the country on finance. And so people tune in to Angelo Christian to learn about mortgages, finance, investments, interest rates, and all kinds of different things. So we really try really hard to educate and empower people so they can understand the best to take control of their finances. And so today we're actually talking about what is payment shock. Have you ever heard of the word payment shock? Well, underwriters know very well what payment shock is, and they actually look at this when you're looking to purchase your home. And it's really important that you know what payment shock is so you kind of know what payment range you need to stay within whenever you're looking to purchase your home. And so that's what we're talking about today, is understanding what payment shock is and what lenders look at, what underwriters look at when they're trying to qualify you for the home loan. So basically, in a nutshell, what is payment shock? So essentially, we have an example here of what payment shock is. And we're just using a simple illustration. If your current rent is $1,000 a month, let's say you pay $1,000 a month for rent, and there's different types of payment shock depending on the type of loan that you're doing. And today we're talking about residential, owner-occupied, primary residences, okay? So on a conforming loan, I put right here, or the underwriter or the lender doesn't want to see your new house payment to be less than or equal to 100% of your current payment. So what does that mean? That means that they don't want to see that your new house that you're purchasing exceeds more than $2,000 a month of your current payment. So because what they're concerned is that if you're used to paying $1,000 a month for the rent, you can't go to $5,000 a month on a mortgage payment a month because it's too big of a jump. It's called payment shock. The shock is too big from going to $1,000 to $2,000. They want you to be below 100% and not exceed $2,000 a month. Okay? So this is an important thing because a lot of people think that, well, if they were renting an apartment for $1,000 a month, they can just go and get $1 million home or a jumbo mortgage. And the lender's probably not going to approve that, guys. I'm just going to be straight up with you. If you're not used to paying $4,000 or $5,000 a month for a place, they're not going to just let you go from $1,000 a month to $4,000 or $5,000 a month. It's too risky for the lender because you're not used to making that type of payment and understanding what that commitment is. And I'm not saying that to be against you or anything. It's just how lending works. Now, I'm not saying they won't do the loan if you put an extremely large down payment or you do a different type of loan, a no-doc loan or something like that. But just traditional lending, they're not going to go for a massive payment shock. Okay. Now, there are different type of loans, and we put here private lending. If you do a private loan, the lender is a little bit more liberal, and they'll let you go up to not to exceed 250% of your existing payment for payment shock. So you could go to a payment of $3,500 maximum, and they would probably be okay with that. Okay, provided that you had the reserves, the credit, that you put enough down payment, all of those things aside, that worked. But this is what, in basic sense, what payment shock is and what lenders are looking at. Generally, people in most loans, most banks, most lenders, mortgage companies don't want you to exceed 100%, okay? Because it's too risky for the bank if something happens, like, maybe you lose your job, we have another pandemic, something crazy, and you went from $1,000 to $5,000 a month on a payment. It might be too aggressive for you and you might not be able to make that commitment. And so if you were the lender, you'd probably understand that too and appreciate that. But in a sense, this is what payment shock is. And we shoot a lot of videos on our podcast about different type of loan terms and different acronyms. And this is what lenders look at. It's called payment shock. So if you're curious, just do it yourself. If you're out there right now and you're renting or you're paying on a mortgage right now, look at your current payment and then look at payment shock of 100%. And that's probably the highest that you can go on your new house payment. And then you can look at it and back that into a calculator to see the maximum purchase price that you can go up to. Okay. So I hope that you guys like this video. We like to shoot a lot of educational videos to teach people and empower them. Please give us a thumbs up on the YouTube. And remember, if you want to get pre-approved, you can call or text our office at 832-431-6331. We are a nationwide lender, guys. We do commercial, residential, hard money, no-doc loans, FHA, VA, USDA, jumbo loans, HELOC loans, lines of credit. investor fix and flip, a ton of opportunities, guys. So we'd love to help you to get you pre-approved for your loan. You can also click on the YouTube link in the description. Actually click there to get pre-approved today, to get signed up. We'd love to hook you up and get you the funding with Angelo Christian. So thank you so much for watching our video, and check out my next video. Thank you so much. Bye-bye.